Are we good? I'm so sorry. I'm so sorry. This is a really important video. So let's just start from the beginning, right? Because legally you are the beneficial owner. So it makes it look like you own something, but you really don't. Any of these intangible instruments, assets, stocks, bonds, ETFs, mutual funds, annuities, all that stuff, you are just the beneficial owner, not the legal registered owner. So what you're looking at here is a Yale Law School study on custodial ownership. Who really owns all of these intangible assets? And you can see that it's pretty complicated in here. But this is also the reason why nobody went to jail for creating the crisis in 2007, 2008. Because there's hypothecation and there's rehypothecation. And I'm going to explain that in just one little second. But what this flow chart shows you is that the big banks here are the legal registered owner of all of those intangible assets. So in court, this is exactly why no one went to jail, because they're the ones that write the contracts. They're written for their benefit, not yours. And one of the things that they can legally do is use your equity for their benefits. So between the big banks over here and all of these banks and brokerages in between, and this can be very, very long string of ownership, every single one of them gets to use your equity for their benefit and use it as collateral to borrow and then go out and take all sorts of risks and trade and do whatever they want. Here you are way down on the bottom. So if you go to court, guess what? Legally, too bad, so sad. It enables everything that I'm about to show you in the banking crisis that is unfolding right this second. Hypothecation is that legal right of the banks and the brokerages to use your equity for their benefit. Rehypothecation is, if this is done through the City of London, which most of these contracts are written in, there are no limitations to how many entities can use that same collateral and go out and gamble with your equity. And you never see it until you see it. But banks make most of their money through trading, and they do that by using your equity to borrow and trade. Now, the reality is that gold is the only financial asset that you cannot do this with physical gold in your possession. They can do it all they want with digital gold and create a whole bunch of gold that does not nor ever will exist. But let me show you what's happening right now, because I started by telling you fintech fight leads to hundreds of thousands of frozen accounts. So this is now coming to light, though, as you'll see, they've known about it for a couple of years. But is this the banking crisis that's going to topple over the global financial structure? Because what they want is to think that it's just in this little area. But what we know and what they've shown us time and time again is that all of the global banks are incestuously intertwined. And they may say to you, oh, that's just in the regional banks, or oh, that's just in the smaller banks, or oh. But the reality is that those big commercial banks, the SIFIs, systemically important financial institutions like Chase and Bank of America and Wells Fargo and Citi and all those guys, those big commercial banks are how smaller banks get funded. And this is an extraordinarily fragile financial system. We're already watching more and more banks fail. That started last year, right about this time, a little bit earlier than this. And it's not over yet. It's not over yet. So you want to make sure that you watch the video that I did last week on the FDIC's quarterly report and how vulnerable these banks are and the fact that they know there's going to be a bail-in. But hey, sophisticated people will be able to understand what's going on. Let me show you the scope of this problem. Synapse is one of the largest players in the banking as a service space, which allows fintech startups to offer banking services by partnering with FDIC insured banks. So when you look on all their literature, it looks like everything is FDIC insured banks. And as long as that money happens to be in the FDIC insured bank when it collapses, well, it is. But unfortunately, the documents that you signed and agreed to open up a new account give them rights in that structural ownership chart that I just showed you to do other funny things, which I'm going to show you. Okay, the company had contracts with 20 banks and 100 fintech firms serving 10 million users. That means 10 million people like you and me that could potentially be impacted by that. So let me repeat, because this is so important. 20 banks, 100 fintech firms, and 10 million end users. It is so convenient to hold everything on your phone. But when it goes bad because, hey, if you don't hold it, you don't own it. Okie dokie. These partnerships allowed companies and what they call neobanks, right, to gather deposits and advertise themselves as FDIC insured. And that gives customers a false sense of security. And I gotta say this, FDIC insurance itself gives people a false sense of security. It was created back in, what year was that? 1933, during that banking crisis there where the public lost all confidence and faith in the system. So it was put in place and, hey, what do I worry about? I'm insured. Well, you are as long as they have the money. And of course, they can print as much as they want. And we've certainly seen in this past year-ish or so how they can bail out those that are chosen because they don't want you to understand that you can be bailed in. And you're saying, well, this is just the fintechs. 20 banks. 20 banks. The effect of that large-scale withdrawal is unknown. What are they talking about here? Right now, all of those funds are, boom, locked. You can't get your money back. What happens when those funds are unlocked? Will there be a run on the fintech companies and how they're integrated into the banks? Because the problem is that there's a lot of money that's missing and they have no idea where it is. We'll talk about that in a second. But how do you think 20 banks, a run at 20 banks would have an impact on your bank? Because it's going to impact the global banks. I don't know if they can keep this one covered up or hidden. But this is legal. That transfer without notice, that first graph, that's why I had to stop it, because until you understand that you really don't own anything, you can remain vulnerable. So in those contracts that you signed with the fintech company, you agreed that they could transfer this stuff without notice. And they don't have to tell you anything else because you already agreed on it. The fintech business model of relying on unregulated middlemen like Synapse, they're unregulated. And not that the banks are much better being regulated. However, the middleman like Synapse has led to this crisis where customers are unable to access their funds due to disputes between the various companies involved. And there's 85 million so far, there may turn out to be more, in unaccounted for losses. That money is just gone and they don't know where it is. This is part of the costs. They're hidden costs in those conveniences. And think about it, that's how they always sell all of these innovations, is how convenient. Oh yeah, who wants to go in and work with dirty cash or heavy gold? Just put it in the cloud and there you go. You got nothing to worry about until you do. These are hidden costs that you're not aware of, but you need to be aware of. Because when you make that deposit, I don't care who it's to, You have actually loaned that entity your wealth. It's not yours anymore. You become a creditor. That's what that flow chart shows you. The bankruptcy trustee says that 85 million of customer savings is missing in this fintech meltdown. And this is not over yet. This is unfolding. The reason why you can't see it is because all those funds, the access to them is locked up. The scary part comes when they open up and they allow people to withdraw money. I don't know how long that's going to take, but I'm definitely watching it. Hypothecation and rehypothecation, which is using your equity as loan collateral. No one knows who owns or holds what because they've got 20 banks that they're working with, 100 fintech companies. This money goes here and then it goes there and it goes here and it goes there and this is used here and it's used. Can you get the picture? It is so convoluted that they can't keep track of it. Where is all of that money? Where did it go? Are they going to be able to figure this out? And how long is that going to take? Because I'm going to tell you right now, nobody's likely getting anything until they figure that out. Is that going to take a week? Is it going to take a month? Is it going to take years? I don't know. But when that happens, if people have access, would you continue to keep your money in some place that locked you out so easily? And by the way, I want you to think about this. What 10 million customers? I don't know who's lost access, but if that's where they were putting their money to pay their bills, how do you think that's going to impact not just them, but whoever they owed their money to? Can you see this snowballs? It's huge and it's scary. Shortfalls that may have existed at each partner bank and at an earlier time is not known at this time. But hey, they make an awful lot of money through that hypothecation and rehypothecation and using your equity, and you have no clue. And it's not the fintech companies that I'm talking about for the hypothecation and rehypothecation. It's your banks that I'm talking about. So this is an early warning, but I'm telling you, this banking crisis could topple the entire system. Users whose funds were pooled in a communal way known as, and I want you to write this one down, for benefit of, or FBO accounts, will have a harder time getting their money legally. So you go into a brokerage. Now look, I started in the 80s at Shearson. And at that time, it was all about pushing people to hold funds in-house. Prior to 71, most people held their stock certificates, most people held their bond certificates. In that case, if you're holding these certificates, the banks and the brokerage houses cannot use your equity for collateral. So they needed all of that gathered in-house. That's what they're talking of. That's what they're talking about. So if you have a brokerage account, if you have a 401k, if you're in these mutual funds, I'm telling you, you've got to read those. You've got to read those prospectuses. An easy way to do that and to check and see if you're vulnerable is go ahead and your administrator would have all of the prospectuses online. You can pull that prospectus up, do a Control F at the same time. That is a search key, a find key, and put for benefit of in there and see how many times that comes up, and then you're going to know. But I'm going to tell you, if you don't hold it, you don't own it. So if you don't want to do that search, if you're holding it in a brokerage account, a 401k, an IRA, a 403b, and a variable annuity, any of those things, you have a for the benefit of account. And it's for your benefit, but you're the one that pays the price, takes all the risk. They're the ones that make all the money. Fintech crisis leaves millions of Americans unable to access their money and pay their bills. I'm reminding you, 36 fintech companies are impacted. These are the ones. You can see that they're small, but follow those links and see if you're doing anything with fintech companies. Is yours involved in this? And I don't know that this is a complete list that are part of this issue at this point. So it might be something that you want to dig much deeper into, but everybody is impacted, even if you don't have a fintech account. I don't have a fintech account, but I do have a bank account. Right? I'm going to be impacted by this. I just don't know when. That's the point of being prepared. Over 1 million Americans may be affected and unable to access their money, except that there are 10 million end users. So are they trying to make this look like, no big deal, it's 1 million people. If you're one impacted, you're going to think it's a big deal. But we have not heard the last of this yet. It's still really, really quiet. Have you heard many people talking about this? Because the bottom line is, and this is why I got to hammer home to you, gold is the only financial asset that runs no counterparty risk. All this other stuff, they're all contracts. And they're all, and so you are a counterparty to these contracts, and they're doing stuff on your behalf. And you want to think that they're supposed to take your best interest into account, but they don't have to take your best interest to account. They're taking their best interest to account. I want you to take yours. I want you to put your goals first. And what does the FDIC have to say about all of this? Because of course now these funds are frozen. The fintech companies are failing. Maybe some banks are failing from this. And the FDIC, Consumer News, comes out and say banking with third-party apps, not our problem. FDIC deposit insurance does not protect against the insolvency or bankruptcy of a non-bank company. Fintechs are non-bank companies. They partner with banks to make them look like a bank and deceive you, but they are not banks. They do not have, and I say this tongue-in-cheek, any FDIC protection, but goodness gracious, by their own admittance, they've got a teeny bit more than a penny to support every single insured deposit, forget uninsured deposits. And so what happens if there's a bank run at 20 banks? It'll become very clear very quickly that there is a much bigger problem than you see. And if enough risk has been transferred, guess what? Like in 29, like in 1970, again in 2008, these markets will just become too expensive to support. Not for you. You are a systemically important financial individual for your family, but not for the world. The banks are for the world. That's who they're protecting. Because what about the contagion from those 20 banks, 36 fintechs, and 10 million customers? Everybody's going to be impacted by this. Are you ready? But I love this because, I don't know, I'm thinking perhaps the owner, the guy that created, the CEO of Synapse, knew something was brewing. Yeah, they knew about it because there he is raising new funds for a new robotics startup. Problems at Synapse were known for at least 2 years, but this is the first we're hearing about it. What do you think about that? And by the way, funded by private equity, I got to tell you. Foundation was started in April. Let's see, what month is this? June. So what is he doing? Getting out while the getting is good? Do you think he might have known that there were problems here, that the end users didn't, that they were not advertising? So people are lulled into this false sense of security. Everything is fine and hunky-dory when it is not. When they have risked their principal for convenience or a little pickup in interest. This is not the time to be taking any risk. And I think central bankers have shown us, this is a risk off asset gold is, physical gold in your possession. I don't know. I saw this with WeWork and Andy, whatever his name is, walking away smelling like a rose when everybody else that invested in WeWork ate it in the shorts. I don't know. Is he trying to walk away from this banking crisis? Can he legally walk away from it? These are things that have yet to be divulged, but I'm going to tell you. I know I goofed this up, but this is such an extremely important video. You need to share it, because this is a banking crisis that is in place right now. It's just being hidden because the funds are locked up. I can't tell you when they're going to unlock the funds. I can't tell you what's going to happen when they unlock the funds. I think that we're going to have a complete meltdown. We could easily be that close. Can they bail out 20 banks? Can they bail out? I don't know. Where's that 85 million? I don't know. Let's hope you're not involved in this, but let's make sure that you're not involved in this, that you are protected. There is that QR code that's coming up on the screen. You can click on that and make a direct link to set up an appointment with one of our strategy specialists. You can click the link below and make that appointment. I'm telling you, get it done. We are all here to be of service. We are paying attention to what's going on, and we want to be a solution for you. We want to help protect you from what is already unfolding. And how much more money do they have to print to make this hide what's happening? Can they print enough money for that? I don't think they can print enough money for that. We'll find out. And I don't know if they can come up with, some other trick to postpone this a little longer, or if they feel like enough risk has been transferred. And then I'm telling you, they do it every single time. And even though I can't guarantee what's going to happen tomorrow, if something happens the same way every single time and they're doing the same thing, what do you think the end result is? They want you to believe that this time is different. But it's never different, and it's not this time. And you need to know that banking crisis, the next one that is likely to rear its head, it's already rearing its head. So now I'm going to take questions. And the first one I'm going to take is Ann Ford. I have $100,000 but want a house during the crash. Should I buy gold until then? Okay, so this is a strategy. You guys know I just recently did that video on how real estate and gold perform during this crisis. If you buy gold with that $100,000 now while it still has a level of purchasing power, then what you're doing is you are holding your purchasing power intact. And when they do that overnight reset, what's currently overvalued in the real estate market and undervalued in the gold market flip-flops. So you're going to be able to buy more, presuming a repetition of history, because I obviously can't guarantee that, but presuming a repetition of history, you'll be able to get a much better house. You'll be able to get some income producing real estate. You're going to know who's washed out, and it's a whole strategy. And that's what we execute, my original strategy at Zang Enterprises. So when you're working with them, you are working with me, because if they need me, I meet with them all the time. We sit down, more than weekly, and we've got one-on-ones. If they have a question, they know where to go. So yeah, for me, I'm holding it in here. I am executing the strategy. I will never, ever, 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 my right hand raised to God, no crossies count. I will never, ever, ever tell you to do something or recommend you do something that I am not doing myself. And when things change for me, I promise you, I will reveal everything. The strategy today is to buy gold that is severely undervalued. Not real estate, unless you gotta have a place to make your last stand. So there are some exceptions. But not real estate that is severely overvalued. When that flip-flops, you're going to be able to get a whole lot more real estate with your gold than you would with these things. And Fernanda asks, Aloha Quantum Wellness. Lynette, quick question regarding using gold to pay mortgage in your other video. Could we use this strategy with credit cards as well? Not really. And the reason is because your mortgage is a fixed rate debt and your credit cards are a variable rate debt. And so that interest rate that they charge you on your credit cards is going to be exploding up while they're going to force you, if they can, if you're not holding gold, they're going to be able to force you, like they did in 2008, to restructure those mortgages. So you don't want variable rate debt. Variable rate debt is a killer, and you'll never get out of debt during this period of time if you're carrying that. Fixed rate debt, then you're executing exactly the same strategy as governments, which is repaying these debts with dollars that have zero value. So yeah, it's definitely different. And James C says, when buying pre-33 gold, does it matter what the PS rating to get? Okay, so I'm not sure what you mean by the PS rating, but let me explain this a little bit. In pre-33 gold coins, first of all, you want those that are graded by the most accepted grading services, and there's this whole 100-point step that these coins go through before they get slabbed. We work with PCGS and NGC, though the preference, I'm going to just be honest with you, because I'll do both of those because they're both globally accepted at whatever they say it is. But PCGS is probably a teeny weeny bit more pure, okay? Because NGC will do things like Mint State 70 silver dollars that were never intended to be in circulation. So I don't really like that. It just means that when you're selling it to somebody, you can charge more, but guarantee you this, or at least this is what I found when I was doing that kind of work. When you talk to the wholesalers, you'll lose that premium. So if you're looking at the pre-33 slabbed coins, it'll have an MS and then a number. MS stands for Mint State. Mint State means never been in circulation. Now remember, prior to 1933, these coins were created to be in circulation. And you see me with my raw coins. These coins were in circulation, right? But this coin was not. This one was not. This happens to be a Mint State 63. 63 tells you the level of blemish, because 100 years ago, they're not thinking about this market, right? So they would have stacked them, they would have thrown them in a pouch, and so they're going to have some scratches and blemishes on them. And that 63, it'll go through 60, which will have the most blemishes, to 70, which is basically perfect. Now, personally, I have never seen a Mint State 70 pre-33 coin. I think the highest grading that I personally own is a Mint State 67. And I have those in common dates, and that's fine. But basically, all of this stuff, the fractional silver and the fractional gold and all that, there's gold and then there's gold. What are you trying to accomplish, right? That's what you have to establish first, because that matters what kind of gold and what kind of silver that you buy. If what you're trying to do is your barterable portfolio to sustain a certain standard of living, then it will be, raw things and fractional gold and silver, and it might be some really, like maybe some Mint State 61s with the most level of blemish, but it depends. If you, and I hope nobody does, have a chronic illness, then, you want to go in that direction. If what you're looking to do, like we were talking about, is in real estate, is to convert some of this gold into those income producing assets, then what you want are growth coins, which have a lower population. Population means how many were minted, how many do we know exist in this quality level. So you want a more rare, lower population, right? And higher quality level. They're all 22 karat gold, so that has nothing to do with quality, but a higher mint state level. You're going to have a lower mint state level on something that's super rare as well. So we have everything broken down into categories. We have everything color coded. We have special boxes. We have special stickers. We have special booklets because we really want you, part of it is buying gold, but anybody can sell you gold and silver. I mean, that doesn't take rocket science, and maybe they were selling shoes last week and they have no idea about what's happening in the markets or the gold market. That's not the case for us. I've been in these markets on some level since, the earliest I can remember is 4 years old. And of course, my Uncle Al taught me how tangible assets move, what their trend cycle looks like, which is from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. Constantly in a loop like that, right? So what you want to do is you want to buy it when it's somewhere here. That's why in these markets, which are physical only, this market is going to be guided not just by the physical part, but primarily by the spot market, right? Whereas this market is a physical only market that gives you a lot more of the truth, especially when you get to the ultra rarities. So if you're working with us, because we have that strategy, take a picture of that QR code. I don't do great with QR codes, so that's why I also insist on having the link in there as well, and set up a time to talk to us, because we are all here to be of service. And I hope that made some sense to you, James. And low blood pressure, and by the way, if I answer a question and you still have more questions, put it in the chat and bring it up and give me a chance to explain it in a different way, because it's important that you understand this. But you can also have that one-on-one with any of our strategy specialists. Okay, low blood pressure asks, Lynette, what do you think of maxing all credit non-secured and getting silver? My ability to pay is their problem. And in some ways, low blood pressure, I kind of agree with it. There is a saying, if I owe you $100,000, I have a problem. If I owe you $1 million, you have a problem. And that's really kind of what you're talking about here. Ethically, I don't really do convenient ethics. If you are an ethical person, then you are an ethical person. And I believe the universe knows this. And so you've got to make whatever choices you're comfortable with. I personally would not make that choice. And besides that, you are adding additional risk onto what you are doing. So, but you do whatever you want, but I personally would not do it. And and I'll tell you something else. Ethics is not necessarily convenient. Nobody lives a life unscathed. And a lot of times our ethics will be tested. That's when it really matters. Not when it's easy, because everybody can do it when it's easy. It's when it's not easy and you show up in that way. And you know how I've done that in my life? Because you guys might recall, and maybe some of you are new and haven't heard this before, but for whatever reason, my father always used to say to me, it was kind of like our little banter thing that we did. And he'd always tell me, do what I say and not what I do. Now, I know that makes him seem less than, and he was truly the greatest man that I've ever known in my life. When he was saying that, it was primarily about driving, because he was a really crappy driver and he never looked behind him. But I would immediately say to him, Daddy, that makes no sense to me. I think that banter prepared me for these periods of time, because quite honestly, I listen to what the central bankers and the government say. I watch what they do. And that's what helps me know if they're being congruent and being honest, or if they're lying, right? You gotta look in the mirror. So Ethics is not convenient, and freedom is not free. And Brandon asks, what happens when the government confiscates gold like it did during the Great Depression? Yeah, exactly. That's why personally, other than that one little bracelet that you see me wear and it has some American Eagle gold coins on it, though that's now jewelry, okay? This is the only kind of gold I buy, because I can't sit here and absolutely guarantee you that they're not going to do it again. They have been stealing your wealth since the day you were born. Look at the purchasing power chart. There's your evidence of that. It's not me saying it. So I like to be in the kind of gold where those 1%ers live, because even though I'm not going to spend $15 million on a coin, anybody that can either likely writes the rules, like Treasury Secretary Wooden back in 33, or they have the ability to influence those that write the rules. And the way that a confiscation, I believe, would look, because the official U.S. price of gold is $42.22. So if you were looking at, say, a 1 ounce American Eagle, what's the face value of that? $50. Can you buy it for $50? No, you cannot, unless you're my grandson and you could talk me into anything, because he's kind of done that before. But why do they have a $50 face value on it, right? You can't buy it for $50. Now, some people think that if they confiscate it, they would do it at face value. But can you imagine paying $3,000 or $2,500 or whatever for an ounce of gold and having it sit in your IRA and them doing a huge sweep of your IRAs and leaving $50 for what you just paid $2,500 for? Too big a problem. Too big a problem. And since they have the ability to do that and just print as much money as they want, I think what is more likely, let's say spot is at $3,000 when this happens, right? More than likely they say, okay, we're going to come in and confiscate your gold. They won't say confiscate. They're going to say, we're going to borrow your gold, or we're going to buy your gold from you, or whatever terms they're going to use, and we'll leave you $4,000. Well, most people believing Wall Street's spot gold lies goes, well, wow, it's only worth $3,000 and they're willing to pay me $4,000. Okay. But like in 33, when they confiscated at $20.67 an ounce, and when they got all the gold that they thought they were going to get, they reset it to $35 an ounce. So everybody lost that much more in purchasing power, ba-bam. We think we haven't gone through a hyperinflation, and in our lifetime maybe we haven't, but there is so much historic precedence in the U.S. for a confiscation that I can't sit here in all good conscience and say there's no way that that can happen again. I like to go, what if I'm right and what if I'm wrong? And if I have a choice where it doesn't matter whether or not I'm right, that is the one that I will take all day long, even if it costs me a little bit of premium. And this is the beauty part, and this is the gift part, because a rising gold price is an indication of a failing currency, right? They suppress the price. So do you think Wall Street's going to tell you what the true value is? Heck no. Look at other currencies that have gone through this, and what you see is eventually there is a black market that develops, and you have gold trading at a certain level in the black market, but not the contracts. You have the physical gold at one level in the gold in the black market, and then you have the official gold price. Then, when all confidence in the currency and the system is lost, that's when they bring in gold, right? And they reset, they take this stuff that is used in one place and has no intrinsic value, and they do that revalue against sound money that is all intrinsic value. And it isn't all intrinsic value because I say so. It's all intrinsic value for a very simple reason. And that is because it is used in every single sector of the global economy. So therefore, it has the most functionality of any asset, why it has never gone to zero, and why 100% it is all intrinsic value. This is not rocket science. But eventually what we've seen over 4,800 times, the same thing has happened. It's trading here in the spot market, it's trading down here in the official market, and those two converge. You want to be holding it before that happens. That's also when you can convert. Maybe we're going to be looking for that cup formation, that accumulation pattern, in order to know when it's time to shift into income producing assets like real estate, like rights, like other things. And Daniel Kelly asks, a hold, I leave my emergency funds in the bank or get it in cash? Well, you've got to do what you're comfortable with. I do have to keep, and most people do have to keep, a certain level of cash in the bank to meet auto withdrawals. And if you own a business, then you're going to have to make payroll. You're going to have to meet your other requirements. In the strategy that we execute at Zang Enterprises, there is a certain level of cash that, you want to pull out of the banking system and have access. How many of those millions of people that have been shut out of their bank accounts, their Synapse accounts, wished that they had held some cash outside of the system? So yes, but depends. Everything always depends, because everybody's circumstances are a little bit different. So even though you're going to be executing the same strategy, it's going to be tweaked and customized to you. Do we have any more questions? Okay.
Shall we kind of piggyback off of that with what does it mean when the money's
You call the bank and you say, I want it, and they say, nope, too bad, so sad, you have no access to it. That's what it means when it's locked up. You can't get to it. And so, that's true for stocks or bonds or anything. And money markets, right? Thursday, the video on money markets is coming out. Last week, I did the video. If you haven't seen this, go watch that, on the FDIC insurance and what's going on there. The system is collapsing. When do you want to get into position to weather it? When do you want to get into position to have an opportunity from it? Right? This is my personal emergency goal. This is what I use for that. This is what I use for growth. This is low growth. Yeah, this is just a higher population, lower quality coin. But I own them at all different levels, depending upon what I'm trying to accomplish. And then those are prioritized. So you're going to be executing the same strategy as me, but again, tweaked to what your goals are first and what your circumstances are. And we're going to help you through this, because that's part of the community, right? But I'm also going to really encourage you to build a local community, get to know your food growers, volunteer on their farms for a day. It's food, water, energy, security, barterability, which is what I like my silver for, but anything physical is barterable, any talent is barterable. Community, arguably the single most important thing right now, and shelter, because these are all the things that we need so that when this next banking crisis becomes apparent and they tell you, no, you're locked out of your money, you can't access it, you're good. They can't tell you jump, because you've got all of those securities, all of those mantra pieces in place. And this is Jules F., so this will be the last question. Two more? Okay. Jules F. asks, Lynette, some of us cannot afford to buy gold. Is silver okay? What are your thoughts? Yes, and community becomes very important. Silver is the secondary currency metal. I have it up. I haven't completed it yet, but I am going to be doing a video quite soon on how both gold and silver behave through hyperinflation as well as deflation. And silver is better than nothing, but coming together in community is what's going to help you get through this. So yes, buy silver, but I mean, if you came in with say $1,000, right? Yeah, probably about $1,000, you could do a combination of both. It would probably be something like fractional gold, a smaller piece of gold, and the balance in silver. So a lot of times people think they can't do both when you actually can. And the other thing that I want to remind you of is that gold and silver in any form is still monetary at its base. So if you have like your old high school class ring that's 10 karat gold, there's still gold in there and it's recoverable. If you have broken jewelry, any of that, that is all gold and it's monetary at its base. And I can tell you that I personally do own a whole bunch of what people consider to be junk. I know better. It's not junk, and you know better now too. So if it says K on there for carat, it's still monetary at its base. There are all different ways that you can accumulate based on your budget, both gold and silver. You know, you always see all of these things. People don't realize that that's money. People don't realize that that's money, right? But it is. And are there more?
There's a lot of questions asking what your opinion on Bitcoin is. Why don't you give that real quickly?
Okay. Well, you know, I believe that Bitcoin was a Trojan horse and is a Trojan horse to get adoption and acceptance of cryptocurrencies. Because as you guys probably know, I don't think it was a coincidence that it came out in January of 2009 when this money for free printing came out. Now they've been trying to, what color is Bitcoin? How do they show it to you? Because it's really intangible. It's gold, right? So what they want you to think is that Bitcoin is the new gold. But here's the difference between the two. It's used in one place. So it has minimal functionality. Whereas the physical gold is used in every single sector of the global economy. It does appear, if you look on the Bank for International Settlements money flower that shows you all the different types of money, there is a space on there for private cryptocurrencies. But there is a much larger space on there for commodity money, right? Now, both of those things are the only assets that are outside of the purview or control of the central banks. I can't sit here and tell you today which cryptocurrencies are going to survive or what that's going to look like when they do. Because the real trend is not whether or not they go up and down in terms of this stuff. The real underlying trend is what you can buy with this stuff. And if all you can do is convert your asset into dollars or euros or yen or wherever you are in the world, and that goes to zero purchasing power, like Zimbabwe, and here's that 100 trillion or $10 trillion, and I can't buy anything with it. Because if a government could say, ooh, this is money, they can also say, nope, no longer money. So I think Bitcoin is a Trojan horse. I don't own any cryptocurrencies at this time. I'm pretty certain that that will not always be true. And when it's no longer true, I will tell you, and I also will tell you what it is that I bought. But I know, no doubt in my mind, not even a teeny weeny one, that we have a major crisis, bigger than anything that we have lived through in our lifetimes. We have a major crisis that is looming large that could be tipped over by this fintech and banking arrangement easily. I mean, 20 banks that are integrated into all the other banks. And I don't think that's going to help you. That is classified. It's a trading asset. It is risk off, right? This is risk on. That's why you've seen them, all of the cryptocurrencies kind of drop, right? But they created that market. How do you create a mint? All right, they knew how to do that. The NSA 1996 white paper. So that's how I feel about Bitcoin. I think it's a Trojan horse. I don't own any. I don't know that that's always going to be true, but quite frankly, I've been watching it since it was $7. And you might say, well, how stupid are you? Why didn't you buy it at $7? Now it's at whatever 60, whatever $1,000. It's because I am not a short-term trader and I don't think about this short-term. I have personally been studying currencies and currency life cycles since 1987. And I am 100%, a bazillion percent certain. And I know for sure that's what we're dealing with now. I was one of the few people that were talking about the reset in 2009, but most likely the first in my area, right? Christine Lagarde talked about it. She was the head of the ECB at that time in 2009. In that 20 minutes, she probably used the word reset about 28, 29 times. And when I heard that, I went, oh crap. So I knew the system died in 2008. I've been talking about the reset since 2009. This is upon us. I can't tell you if they come up with some other, because I didn't see quantitative easing. I missed that. And that enabled them to postpone it until they got the next iteration in play. The next iteration is a full surveillance currency, the CBDCs. They have to get you to accept that. And so in order to do that, what they do is they try and keep things looking as normal as possible. Read their documents. They actually say this. And so if they want to take us into a cryptocurrency full surveillance, how could they do that? They have to get you comfortable with it. They have to get you used to it. The last time I checked, and it's been a while, I'm not going to lie, it's been a while, so I don't know what the adoption rate is now, but the adoption rate was 16%. They were ready. They're making themselves ready. So I think it's a Trojan horse, and I'm not buying into it. And Raymond Ayers asks, hi Lynette, I want to hold funds in a safe asset. Do you suggest buying gold online? Do you sell gold? I don't really suggest buying gold online. And yes, we do. We make sure to position you based upon your goals and what you're trying to accomplish. So you can take a picture and click that. I'm not really sure how the QR codes work, but
hasn't come up yet.
It hasn't come up yet.
So it's the link.
It's the link.
We have all the
Okay.
links, yes.
Click that link below.
Yep.
Then you'll get to talk to a live person at Zang Enterprises, and they will help you position into what is going to support your goals. Physical gold, physical silver, preferably in your possession, because we do IRAs. That's not my favorite way to do it, because if you don't hold it, you don't own it, regardless of your perception. So I really do believe that you should buy it, you should hold it, you should convert this crappy fiat money into this sound money. So I know I got to apologize for the screw up in the beginning. That's what happens when you go live, but I like doing this stuff live, and I hope that you do too. So if you want to show your support, give us a like, leave us a comment. This video, if you go fast, so you go to the part where it really starts, okay, is so important to share. So critically important to share. Probably one of the most important videos that I've ever done, because it is a banking crisis that is unfolding right this second, but yet being hidden from you. Because just like those FDIC guys laughed, oh, of course the public is going to be bailed in. I mean, evil SOBs, that's not okay with me. But I do know that if we come together in global community, and if we can do and grow this sound money globally, this community, we got a shot at being at the table in the next iteration. And that's where I think we need to be. Otherwise, it's not going to be good for any of us. So until next we meet, please be safe out there. Bye-bye.